Welcome to today's market report.
European stocks scaled new highs on Friday and clocked their fourth consecutive week of gains on optimism over a strong earnings season and steady recovery from the pandemic-led economic downturn. The Pan-European Stock 600 index inched up 0.2% to a record high of 476.16 for the 10th straight session. The index has now matched its best winning streak since December 2006. While the pace of gains has slowed due to thin summer trading, the index has logged 9-day gaining streaks 7 times in the past 15 years. German DAX index ticked above 16,000 points for the first time ever, while France's CAC 40 index touched its highest level in nearly 21 years. Both European and US stocks hit record levels this week, supported by rising earnings expectations and improving economic data, even as Asian equities were held back by worry about Chinese regulation, the fast-spreading Delta variant of the coronavirus. If investors are concerned about rising Delta variant cases globally, there is little evidence that it is prompting any undue worry, although markets in Asia have been a little more cautious. Meanwhile, speculation that the US Fed would soon start to unwind its bond buying stimulus calmed a bit following tame US consumer prices data this week. Focus will be on the minutes from the US Central Bank's last policy meeting next week for clues on the outlook for monetary policy. With equity markets almost doubling since the start of the pandemic and a bull market lasting over a decade, investors are questioning how far the bull market can rally. With higher inflation and regulatory risk, we believe value stocks will outperform growth stocks, according to Federated Hermes. Italian shares were also trading near their highest since September 2008. Adidas rose 2.3% after it said it was selling Reebok to Authentic Brands Group for up to 2.1 billion euros. Pet suppliers retailer Zooplus shoot up 41.1% after it accepted a takeover offer worth around 3 billion euros from US private equity firm Hellman and Friedman. French healthcare company Ipsen tumbled 12.7% after it withdrew a US application for Palovarotene, its treatment for an extremely rare disease that causes muscles and tissue to turn to bone. The WTI crude oil was down 1.75% at $67.88 per barrel. Brent oil was down 1.72% at $70.08 per barrel. Gold futures was up 1.63% at $1,780.40 per ounce. On the FX front, following a consolidation phase around 138 during the European trading hours on Friday, GBP-USD pair gained traction and extended its daily rebound in the American session, trading at 138.51. The renewed US dollar weakness on disappointing consumer confidence data from the US seems to be fueling GBP-USD's upside. The University of Michigan announced on Friday that the Consumer Sentiment Index declined to its lowest level since December 2011 at 70.2 in August. Additionally, the Consumer's Current Conditions Index dropped to 77.9 from 84.5 in June, reflecting the negative impact of this report on the greenback. The US dollar index is losing 0.45% at 92.56. Meanwhile, the benchmark 10-year US Treasury bond yield is down more than 3% on Friday, putting additional weight on the dollar. The euro-dollar rose further and printed a fresh weekly high at 118. The pair is hovering around the highs, with the bullish tone in place as the US dollar remains under pressure across the board. Bearish risks continue to prevail in the euro-sterling, according to analysts at Fuji Bank. They called the idea of shorting the cross with a target at 0.8320. They considered that positive developments around COVID reinforces the bullish outlook for the pound. We are aiming at a short euro-sterling trade idea to reflect in building confidence in our bullish outlook for the GBP. We have been encouraged by recent positive COVID data from the UK, suggesting that the risk of further pandemic-related disruption to the UK economic recovery has diminished. The vaccine rollout and the number of people who have already caught COVID should help dampen the severity of the current and any further COVID waves, allowing the government to refrain from reimposing significant restrictions. The case for a stronger pound has been reinforced after the BOE took another step closer to tightening policy at their latest MPC meeting. It has further encouraged market participants to price in more rate hikes.
This is today's market news. Thanks for listening. We'll see you next time.